ago. But first this hour, there's mounting evidence that oil prices are stabilising and could even begin to rise again. At least that's according to the International Energy Agency, who say that lower oil output in the US and other countries is helping to curb the current glut in the supply of oil. Well, the Intergovernmental Organisation also says that the increase in supply from Iran has been less dramatic than first feared. Oil prices have plummeted since August 2014, falling as low as $27 a barrel before then recovering to around $40 where they are at the moment. Well, with me here in the studio now to discuss all of this is Abhishek Deshpande from Natixis Corporate and Investment Bank. And many thanks for joining me here in the studio, Abhishek. So do you agree with that assessment of the IA?
I mean, in theoretical sense, yes, we are hearing news, and our own analysis suggests that US production is going to slow down, in fact, by 500,000 barrels per day year on year. And these are the guidances being given this year by US oil companies as well, that they will be cutting back production. So, of course, investors are taking that as a cue to go back and increase their investment, which is pushing the prices up.
So do you think the oil price has bottomed out? Have we seen the worst of it now?
I don't think so, because we are still in the first and the second quarter where we are still seeing stock builds. So fundamentally speaking, we are still in a weak quarter, and these stock builds, if they were to test the storage capacities worldwide, or at least in the OECD part of the world, which is US and Europe, then we could still see a further correction before we start seeing a sustainable support to prices.
So it sounds to me like you disagree. You do not believe that the fundamentals which have driven the oil price so low have actually really changed substantially.
Not at all. In fact, the fundamentals haven't changed that much, as IEA reports also suggest that yes, fundamentally we are still in excess market, except the excess is going to reduce towards the end of the year. But what I want to say is that all agreed investors are going to see that the excess is going to be lesser now than the last month's report. So they might think it to go and increase their net long positions, which is what is supporting the prices. So
if you think this has actually just been an investor-led rally, investors wanting to see the oil price go up, what about the arguments put forward that output from Iran's been less dramatic than feared, and that we've got Saudi Arabia, the key OPEC member, and Russia, the key non-OPEC member, both saying that they could freeze output as well? Surely that's got to help the situation.
Exactly. I mean, there are a lot of talks going on and sentiments that is really helping boost prices as well. For example, the OPEC, non-OPEC talks right now, it's literally a lip service so far. We haven't really seen any proper agreement between these nations. Besides that, if they were to agree on a freeze pre-11 January levels as they had discussed, then of course we have run numbers and we do believe markets will get balanced by third quarter. But that's a very big but there. Will Iran freeze its levels at 11 January levels? And for us, it's counterintuitive to expect Iran to freeze just after that date was the sanctions on Iran they were lifted. So why should Iran agree to such a freeze? And in the absence of Iran not agreeing to freeze, we don't see markets being balanced. And in that case, I think we still have some pressure on the prices, at least in this and next quarter.